January opened on a notably clean note for supermicro computer (SMCI), with no preliminary guidance revisions or cautionary language issued by management. Market participants have interpreted this silence as a subtle yet meaningful signal that results may come in at or above consensus expectations. Historically, when companies face material downside risk, management often provides pre-earnings caution or guidance revisions to mitigate investor surprise. The absence of such commentary has therefore become a central point of discussion among investors and traders, signaling potential confidence in upcoming results. Guys, 99% of people watching don't like or subscribe to the videos, so please take a second to hit that like button and subscribe. It really helps the channel grow. I'm not telling you to sell VO. That would be a mistake. This perceived confidence has driven speculation around several factors. Market observers are considering the possibility of an earnings beat, stronger than expected AI server demand commentary, or more favorable forward guidance in the near term. The narrative has gained traction rapidly across social media channels and trading forums, prompting conversations about short squeeze potential. SMCI's relatively elevated short interest, currently around 17%, combined with its historical pattern of sharp post-earnings price movements, has further amplified these discussions. While 17% short interest is not extreme compared to other highly shorted names, it remains sufficiently elevated to influence market dynamics, particularly in the context of a potential catalyst. From a technical perspective, SMCI is currently exhibiting a neutral to bullish trend. The stock has shown notable strength since January 15th, and extrapolations made as of January 22nd accurately anticipated the current update. Analysts projecting forward suggest that the stock may maintain its strength through Tuesday, January 27th, after which a period of consolidation is likely to extend into early March. This pattern indicates a near-term opportunity for trend-following strategies while signaling caution around potential mid- to longer-term consolidation. Examining the 4-hour chart provides additional clarity. The stock currently reflects a gain of 2.62% with approximately 1 million shares crossing the tape, indicating moderate liquidity and active participation. SMCI remains easy to borrow, which is a relevant consideration for short sellers and those looking to hedge positions. Technical readings suggest that the current upward bias may persist through the close of trading on Monday, January 26th. Following that, price action could contract into midday on January 27th before the uptrend potentially resumes. Momentum is expected to gradually weaken during this contraction period, which is consistent with normal trend oscillations ahead of earnings-driven catalysts. Momentum and moving average analysis further support this view. The 10-period moving average on the 4-hour chart is rising at an implied rate of 6.24 per 4 hours, offering a directional signal rather than an exact price projection. Trend mode analysis shows that all shorter-term moving averages are trending positively, while the 200-period moving average remains flat or slightly down, suggesting that the longer-term trend has not fully reversed. The current price is $33.27. Positioning the stock near a neutral zone relative to short-term momentum indicators. Market grid projections offer a probabilistic range for price movement. If upside momentum continues, the stock may retest $33.67 and potentially reach $34.37. Extreme price pressure momentum readings indicate a higher likelihood of upward extension than grid probabilities alone suggest. Both the 10-period and 21-period moving averages are in extreme trend mode, highlighting the elevated probability of breaking through near-term resistance levels R1 and R2, located at $33.67 and $33.91 respectively. Intraday data confirms that SMCI has already reached a high of $33.75, demonstrating engagement with these resistance levels, followed by a minor pullback. This interplay between momentum and price levels illustrates the dynamic and responsive nature of the market as it absorbs speculative positioning and liquidity flows. For trade planning, the framework identifies an entry zone near current levels. Upside targets are set at $33.91, $34.15, and $34.50, with a stop loss at $32.75. This setup is informed by extreme price pressure momentum readings, high continuation probability, and positive derivative signals indicating accelerated momentum. The absence of pre-earnings warnings further reinforces bullish sentiment, while the potential for a short squeeze exists due to elevated retail interest and positioning. Despite these favorable conditions, significant risks remain. The 200-period moving average suggests that the intermediate trend has not fully reversed, leaving the potential for pullbacks or volatility spikes in the event of earnings surprises. Longer-term strategies also consider fading scenarios, particularly if results disappoint or downward pressure accelerates. In such cases, downside targets include $32 and $30, with the possibility of testing lower levels depending on follow-through. These scenarios underscore the importance of disciplined risk management and the need to monitor momentum readings closely. In conclusion, as of Friday, January 23rd, SMCI remains in a neutral to bullish technical environment. The stock is actively trading with strong momentum signals, but the market remains sensitive to both short-term catalysts, including upcoming earnings, and longer-term consolidation pressures. Traders and investors should weigh the high-probability upside extension indicated by momentum readings against the structural intermediate downtrend suggested by longer-term moving averages. The balance of these factors provides a clear